Hello and welcome to Cboe Volatility 411 for Friday. My name is Dan Deming and I'm with KKM Financial. Well, we're seeing a twitchy market as we close out the week here, folks. SPX currently down. Now, we did see the SPX higher most of the morning, but we had some news items hit the tape, and again, it's related to the China-U.S. relations. And with that, we're seeing the SPX selling off and the VIX spiking higher. We did see a VIX current trading earlier in the day, right around the 1550 level. Spiking up to 1670 right now, and I can tell you when you look at some of the moving parts here, we are seeing quite a bit of premium in that front month future, so about $1.50 in premium. So again, some risk premium is being priced into not only the front month future, but also the November future. We're seeing about a $3 premium in that future relative to the cash. And I want to point out, when you look at realized volatility, we continue to see that trend lower. So again, even though realized volatility has trended down from 17.5 to 13, I mean, you look at 30-day realized volatility, I think that's another part of the equation here why we're seeing the VIX cash now holding up here around the 15.5, 16 level, a little bit of risk premium because of these headline risks that the markets have to contend with on a day-to-day basis. Looking at VVIX, measure implied volatility in the VIX options, about 97, so a lower end of the range for the week, holding pretty much where we were last week. We did see it pop up to 108 in the middle of the week when we saw some selling pressure on the SPX, but again, elevated relative to historical levels, but again, kind of range bound for this week, right around that 97.5 level. Looking at activity, actually today we're seeing more put activity in October. We're seeing downside puts being purchased. When you look at the 15s and the 14 puts, there's a lot of activity there. Some out-of-the-money call activity in October and November, that's really kind of sparse, but the put activity in the front month has been where the action has been to this point. Looking at next week, again, we got some headline risk. We got the end of the month. Monday is the last trading day of the quarter as well as the month. Also, unemployment next Friday, so we're going to get that dynamic priced into the market next week, coupled with the fact that we continue to see the tensions between China and U.S. influencing the market, plus the instability in Washington, D.C.